Hello everyone, welcome back to my channel. So this marks the wrap-up video of week number 6 for our road to 200k challenge. This week was a very heavy one in terms of the losses. Markets have been coming down day after day, and especially I would say in anticipation to the jobs report in the United States, which came out last Friday. And so markets were already anticipating a poor jobs performance in terms of new hirings, and so or rather new jobs being created. And because of that, investors were already anticipating a poor jobs report, so losses were already coming into play or happening in the days leading up to Friday, so Wednesday, Thursday. And when the confirmation came that in fact the jobs report came a bit below expectations, then of course the markets continued to fall, especially on Friday. It was a particularly heavy day in terms of the losses. And so, as a result, some of the puts that we had on HIMS were assigned, namely the ones with strike price of 14. And so, but the ones that I had at 13.5, namely these ones right here, those were not assigned because the strike price was not reached. And so these expire worthless, but these ones were in fact assigned. But as for the rest, yeah, as you can see right here is a sea of red, pretty heavy losses all around. And so, yeah, but this is something that relates to the sentiment of the market at this point. And so, of course, as it always happens, markets go down when sentiment is negative, and things eventually turn around and the mood becomes positive, and of course the markets recover. And we are at this point a little bit less than 2 weeks away from the Fed meeting, and of course the jobs report now reinforces the sentiment that investors have that the Fed needs to act decisively in the next Fed meeting on January 17th and 18th, with a pretty robust cut in interest rates. And so that's what markets are expecting. For the most part, a 50 basis point cut is on the cards according to investors' expectations. We don't know what is going to happen, but of course I think any less than that markets will feel like, all right, the Fed is not doing enough, and so the economy will continue to sink from the perspective. And so I don't think that markets will recover before any decisive action on the Fed in that regard. But we will see what happens. For the time being, and of course given the trades that we did on last Tuesday, on Monday the market was closed, so it's not really relevant. But for the time being, I have to say that because of the markets the way the markets developed over the week, I did not do any trades over the course of the week after Tuesday, especially, and because most of the markets continued to fall, so there was no puts becoming essentially worthless before their maturity. However, as you can see right here, I had these two calls which I sold previously, but even though they depreciated quite a lot in price, as you can see right here, these calls that I sold for, I think, about 45, I guess, yes, correct, and now they are currently at 5 cents. I could have bought them back, it would probably make sense, but the thing is, given the fall in Estée Lauder's price, I could not roll over these calls, meaning buying these back and selling some more, without extending the maturity of it, because with a strike of 98 and prices at this point very low, there are simply no calls to be sold available with a strike price of 98, which is a break-even strike for me. So yeah, basically I'm going to, unless something happens significantly, meaning the price rises up, I will just let it mature and expire worthless, because there is nothing else we can do other than exposing ourselves to a potential loss. And the same thing goes in here with the HIMS, with this call. Even though now this call could be bought back and could be rolled over, and could be rolled over into a lower strike price, because now that I bought 800 more shares at the price of 14, the average price, which is actually around 16.36, not the 16.25 we see here. I made the calculations of all the prices in my calculator, so it's 16.36. But even so, as you can see here, if we go here to the option chain, there is no even if you pick 2 weeks calls, 2 weeks option chain, as you can see, in order for us to avoid a potential loss, there is no calls being sold. And even if we took a capital loss but still profit on the we still get the overall profit because of the premiums, it would still be 5 cents. And so I don't think, given the position we currently have, that it becomes worth it to buy this one back and sell another one for just 5 cents, and committing ourselves for 2 weeks to a small loss on the capital, but overall gain because of the premiums. I don't think that's worth it, and so for the time being we will just let it expire until maturity. And well, in this case, because these are only 14, probably the next week what I will do is just can put but it depends on what the markets do. I can sell 800 more 8 more calls, but yeah, it really depends on what is going to happen. And so for the time being, this is it. Let's just record our trades and their actual outcomes in our scoreboard. So as you can see right here, these calls on Pfizer and these puts on HIMS expired worthless. All right, so as you can see here, let's just put this in here. This one expired worthless. It expired, of course, on the 6th, which gives us, of course, a pretty good profit right here, and also this as well. These calls on Pfizer also expired worthless. Given the fall in its price, let's see what's going to happen next week in terms of our ability to sell more calls on Pfizer, because as the price fell, and even though it's 28.52, let's see. At this point, I'm not sure if it's going to be available. Actually, there is, and it's still quite feasible in terms of the price. This allows us to break even on the price and would still get a pretty good premium. So yeah, this will basically be our target for next week, and we will see basically what happens. But I'm fairly optimistic that eventually we will be able to sell these stocks, even though the stock is good quality. But I'm hopeful to sell them for the time being in order to release more capital to address some of these more problematic stocks that we are currently holding. Because for any other trades that we have in here, there is nothing else we can do, because we're not going to sell calls on them and risk a loss. And at the moment, I'm fully focused on getting rid of the HIMS stock. So, and this stock was assigned for HIMS. All right, so this stock was assigned, and currently the price is 13.69 and I bought them at 14. So again, just for me to remind you, this is a sort of a mark-to-market loss. And so next week, next Monday, because the price will move, this loss will be different in terms of its size, and so it will only become a realized loss when we sell back the stock. And so I'm not concerned about the values that come up in this regard, like right here, because what really matters is that when we sell the stock, all right, do we sell breaking even with a capital gain or with a capital loss? That's what's really important. And then I'm going to put, in the same fashion I put it in here, the same calculation for here, because of course for these stocks now the wheel turned, and now we are going to try at least to sell some calls on this additional HIM stock and see what happens. For the other trades we put in, these will not expire, has not expired this week. They will expire next week on the 13th of September. So yeah, we'll have to see how they develop, but my expectation is that nothing will happen and they will just expire worthless at this point. But for the time being, that is all. Next week, or I mean, should I say tomorrow on Monday, the strategy will be more of the same. We are rather low on buying power, but the plan will be again to try to lower the HIB stock average price even further, so that with a minimum price increase or spike, we will be able to sell the entire lot of HIM's stock without realizing a capital loss. So this will be the plan for next week, and for the time being, yeah, that is all. Let me know what are your opinions and comments in the comment section below. Also feel free to connect with me on LinkedIn and like the video and subscribe to the channel. And yeah, basically this is it, and I'll see you all on the next one.